Focus on the FMCG space now. According to HDFC Securities, the worst impact of inflation on mass consumption seems to be behind us. Naveen Trivedi, who's the Associate Vice President, Institutional Research at HDFC Securities, joins us now. Naveen, thanks for joining in. So if the worst of the inflationary pressure is behind us, then which are the stocks that one should be looking at to play this theme?
Yeah, good morning, everyone. So, Sonia, when we are saying the worst is behind, we are still giving an idea about the volume recovery will be slightly gradual. Okay, so the price cuts have initiated and consumer promotions have been initiated. These initiatives will start playing in terms of the volume pickup slightly on the back end ended, and thereby volume recovery will be gradual. Having said that, the worst impact of inflation, which we had seen last some of the quarters, it is expected that that is behind. Okay, so the question mark is about the volume recovery as well as the kind of price cuts which companies have been initiated, how it will impact the revenue growth. So having said that, we believe that Dabur is one company where we expect that price cut impact will be minimal because they are not the one which are very sensitive to any specific RM basket, and thereby the price increase and price decrease typically happens on a slightly on a lower note. So in the current context of improving volume trajectory, if there is no price cut impact in the business, I think relatively they will report better revenue growth in the coming quarters.
Okay, Naveen, why the thesis that the worst is behind, or why can't it get worse, in your opinion?
See, recent oil basket certainly has again seen inflationary trend. It may have some impact, but we need to see how long it will be there in terms of the sustaining the inflationary trend. When we are saying versus behind, it's not about we are calling out that immediate recovery will be there in another couple of months. We are more calling out about the tough environment of volume impact which we had seen last 5-6 quarters. That is something where it seems behind.
You track durables as well, Naveen, or only staples? Durables as well. What about there? I mean, again, categories there have seen degrowth over the last couple of quarters. What's the best way to get exposure there? I mean, stocks have also done poorly. So what's the best way to get exposure if one has to?
I would say, again, the Q2, the Diwali festive season benefit this year has shifted to Q3, and thereby Q2 will also be look slightly on a similar trajectory what we have seen a couple of quarters back, where B2B growth is very strong, B2C is still struggling. We don't expect any meaningful change in the Q2 with respect to the B2B and B2C trajectory which we had seen earlier. However, if you look at third quarter onwards, I think where ECD is one which has struggled a lot in the last couple of quarters because of the rating change impact. The inventory levels are soft now with respect to and the non-rated fund inventory is already liquidated. So there the primary numbers should benefit in the second half sort of onwards.
Okay, I just wanted your thoughts on Imami because they've entered that juice category, right? They've acquired 26% in Axiom Ayurveda. And we understand, from our colleague Mangalam that this juice segment has over 60% gross margins. So do you think that it's a big positive for Imami, and how would you approach the stock?
I would say, Sonia, typically Imami is always look for a high gross margin business. Historically, also, if you look at their own core business margin as well as the business which they had acquired, they are always pertinent towards high gross margin business. So juices is a very attractive business from the larger market point of view. This is quite a niche within that. We need to see how they execute the segment going ahead. But from the point of view of looking back the last couple of years, their steps towards the inorganic route is quite vocal, and there have been some small acquisitions which the Imami is doing. We need to see how they will execute these small acquisitions to a larger scale.
In the QSR space, Naveen, anything you like?
I think fundamentally wise, discretionary, we have been seeing that there has been deceleration in the demand trend, and that has been the case last 2 quarters. This quarter also, we are expecting a similar weakness in the triple SSG side, and thereby the margin impact and the will be even higher in this quarter. So quarter two will be a tough quarter for QSR's point of view. And I think Q3 will be a key monitorable because of the World Cup and festive seasons will pick up will kick in the quarter three. Still, we believe that weaker franchises will
Sure, sure. Okay, I think there's some issue with the audio
see
over there.
a bigger pressure during this time
Got it.
period.
Sorry, we can't hear you very well, but I think we got the gist of what you're trying to say. Appreciate your thoughts. Thanks a lot for joining in.